Okay, well, welcome to our webinar today. Just a quick show of hands. How many of you have heard of the horse racing term, a banker? Okay, not me. I don't think many people have that. I think some of you might be confused what I mean by that. No hands going up, so I don't presume. Dion, okay, Dion's heard about it. Awesome. There's a lot of question marks. Great. Okay, so the whole idea is obviously when I ask that question is to create a bit of interaction. So thank you very much for participating. Okay. Yeah, so the topic is 5 bankers not affected by volatility. A banker is a horse racing term that refers to a highly probable winner for a particular race. In other words, it's a certain bet that a horse that it's a horse that stands out above the rest. Okay, or just a horse that has the potential to win that particular race. So a bit of a if you guys didn't read the rest of the mailer regarding the webinar, I'm not talking about 5 banking shares. These are 5 bankers. So just understand that I'm not talking about the banking sector today. I'm talking about 5 bankers. I'm using the horse racing term, and I'm going to talk more about technical analysis today and trading. And next week will be this very similar topic, 5 bankers, but it's more from a fundamental and investment angle. Okay, so just from my side, before we get really into the presentation, I'd like to say thank you very much for being on this webinar today. I know that last week we had the elections and that, and yesterday we had the public holiday, so we were very much in a holiday mood, but thanks for being on this webinar, taking time out of your busy schedule for being here. I appreciate your support and your interest. Okay, so my objective today with this webinar is threefold. Number one, that you understand what are the winning characteristics of call it a potential watch list of trading stocks. How would you select those winners to trade? And thirdly, obviously, what would you do to hold those potential winners? So it's all about having certain technical criteria. This is what I've been doing for years and years, and there's just one method. I know you guys, there's many methods out there. This is what helps me. I find it's very time efficient, very easy way to find potential winners. But we'll add on to that. Okay, so let's kick off with a quote, like I always do. Quote from Alex Berenson. He is a former reporter for the New York Times. The topic says 5 bankers not affected by volatility. Now, when it comes to technical analysis and trading, you must understand that as a trader, you want volatility. So here's a quote from Alex. It says, volatility may be rising simply because investors or traders must digest more information every day. So yes, so you can talk about the volatility index, the VIX index, all that kind of stuff. And there's been a lot of volatility over the last few months, and there's a lot of factors around that. But as a trader, you welcome volatility. So it's a bit of a misleading quote, misleading topic. When you're looking at a trading portfolio, trading watch list, you want volatility, and we'll go into more detail just now on it. Okay, so what is the current situation for a lot of people, or for a lot of traders? You know, we talk about volatile markets. Now, as an investor, many investors will bristle at the idea of market volatility, but as I say, most traders embrace it. Each trader knows his or her call it factors that will drive them personally into the market. And most of the time it's the volatility, market volatility that traders are looking for. So what is volatility? Basically, it's just a wide price fluctuations and heavy trading that results in imbalance in the market, and astute traders will take advantage of that. So that is, in a nutshell, and I'm not going to go into too much detail about the volatility because that's not the main focus of this presentation, but also understand and talking about on a global platform, that to talk about intermarket volatility. There's an old saying, if the US sneezes, the JSE catches a cold. So, if the JSE goes up and because of the rand, it's the forex markets, and the rand goes up, and the bond market might be affected. So everything is interrelated. That's one thing that you must understand about the markets with volatility. Uh, so I'm not going to go into too much detail about international markets. I'm going to focus mainly on the local market. But I think a lot of traders are finding this situation that yes, we dream to be making money and making profits in our trading portfolio, but in reality, a lot of us are losing money. And it's not an easy market because of the volatility. We get spooked, and our stops might be too tight, or we don't have a stop, and then eventually we can't handle the pain anymore and we get out. Okay, so that is a current situation for a lot of traders at this point in time. And if you look at what's been happening over the last since the beginning of the year, now this is the JC All Share. Looking at all the shares on the market, you can see yes, it's just above the moving averages. This green line is a 200-day moving average, and that red line is a 50-day. But where the two of them cross, that's what we call the golden cross. So yes, we still call it bullish. But you can see also for the last 4 or 5 months, it's been sideways. In the sideways market, a bit of consolidation, wait and see. But you can see also just from a growth point of view, from the 1st of January till this was until Friday. Unfortunately, I didn't have access to more updated data. So all these slides you'll see now is until Friday's information. I want to get the idea across, the process, how do you select the winners, etc. So it doesn't matter if it's Friday's data, but it's also difficult to find winners for today if you don't have the data already. But the JC All Share is only up 6%, just over 6% for the year. Okay, and you can see that this high is the same as that high, so a bit of a double top. But you can see a bit of a sideways market, and the market can go any which way now. And I saw this morning that the rand being so strong, you can anticipate that a lot of the rand hedge stocks will be affected by that. By the way, there's a lot of slides I've hidden here. So when you get the actual PDF of the presentation, you'll be able to see the other slides. But I want to get the idea across to you guys what's available. Where have all the performance been? Where's the action been? And lo and behold, it's been the unloved sectors, the gold mining stocks, the platinum stocks, the mining stocks have been running like crazy, resources and things like that. And those are the stocks a lot of people have been staying away from because they're saying, oh, there's no growth in China, commodities have been under pressure, but in fact, they've been the other way around. So this is where the action has been happening. But unfortunately, I think the market has run. I think it's a bit too late to get into these stocks right now. Wait for a pullback. But I also believe there's going to be a bit of a sector rotation. People will be moving, taking their profits in these sectors and moving into the sectors that are underperforming. So I've hidden the other slides because of time constraints, but you'll be able to see the sectors have been underperforming. But to show you from a graph point of view, this is looking at the gold mining sector. You can see how that run. For a long time, there was a sideways market, 3-4 months sideways market, and we had this breakout. Okay, but the gold mining shares, the sector from the 1st of January, we're up 150%. So those of you that were eternal bulls held it all the way through and now you're bouncing back, yeah, some of you might be smiling or you might just be breaking even. This is platinum. You can see also up 130%. Coal mining, 93%. And basic materials, which is your resources, is up 34%. As I say, I've done the opposite. The sector's gone down, but I've hidden those slides, but you can be able to look at the presentation. So what is the ideal situation? Where do you want to be right now? And this is where I've stolen the idea from the horse racing fraternity. You want to be in a situation where you want to create a watch list of potential winners. Yes, we missed the bus with the gold mining stocks and the platinum stocks. But right now, how many of you, if I'd ask the question again, how many of you have actually betted on a horse race before? If you know anything about a banker, you would have said, yes, I would know something about a horse race. Okay, I personally have never played horses. I don't know why. I mean, I don't know anything about them. Hendrik, okay, you played horses before. I've never played horses because I don't know how. So I stay away from things I don't understand. Okay, not many people have played horses. Okay, cool. But my idea is that the way I understand it from the punters as such, one of the most popular horse racing bets is what they call a trifecta. And what I understand from the guys is you're trying to predict which horses would finish first, second, and third in the correct order. So just bear with me with this analogy. But any punter who's setting out to win this this trifecta has got a good chance of winning big dividends because of the multiple combinations involved. Okay, but the way I understand it, also they talk about a banker trifecta, where you pick one horse is a winner, and then you'll be your banker, and then obviously you'd be choosing horses around it to finish second and third. So it's the same thing now with a watch list of potential. I call it a watch list of potential winners. So let's take it the other way. Thanks, guys, for participating again. So yeah, in a horse trade, there's usually, the way I understand it also, there's usually about 20 horses in a particular race. So on the PSG's Wealth website, you can create 3 different watch lists with 30 shares in each. The idea is to make the list smaller, more manageable. That's number one. So it's a big time saver. And number 2 is obviously, once you've got a watch list, all the information is linked to it through to the share info pages. But you understand what I'm meaning by creating a list of potential winners. There'll be certain criteria I'll be using to put the horses into my watch list. And out of that watch list, I'll be picking my 3 or 4 or 5 stocks to be trading with. And that's the presentation today. That's the ideal position. So you don't have to be overwhelmed with information, not looking at the whole market, looking at only about 3 or 4 or 5 different shares to trade. And we'll be talking about 5 different shares today. So my objective today is to come up with some process. As a punter, I understand that these guys are quite methodical in the way they choose their horses and things like that. So it's the same idea. Yeah, you want to be methodical in your process. And this is the way I look at the market. I trade in the direction of the primary trend. So anyway, are we talking about moving averages? And a lot of you that know me, I always use the 50-day and the 200 days, the crossover of the two of them. If the share trading above the 200-day, you should be more on the long side. So yes, I'll be talking more about derivatives like single stocks and CFDs in this presentation, because I believe that you want to be focusing on potential winners and only the top 100 stocks. So from that top 100 stocks, you make your list a bit smaller. So you're using leverage and gearing. And I think as a trader, you need to be doing that to make it more capital efficient. So trade in the direction of the trend. Okay, the trend's your friend. That's old cliche, but it's very, very true. Number one. Number 2, I like to trade if it's a bullish stock. I want to be trading stocks that were based on relative strength indicator. It's outperforming, and if it's bearish, I want to trade stocks that are underperforming. So that's what I talk about: strong and weak stocks. Number 3, very important. You want to stick to free dealing stocks. So a lot of those shares in the top 100 are free dealing. They have high volume, so they're tradable. You'll be able to get out of them straight away. So that's what I mean by those first 3 criteria. And out of that, and I'll be explaining the process, how to create that watch list of potential winners. You want to create a watch list. And I suggest split them up between financial, industrial, and mining stocks, those 3 different watch lists. So you can see where the activity is. And then also it depends on your style. What kind of trader are you? Are you a day trader? Are you a swing trader? Day trader is someone that doesn't want to hold a position overnight. A swing trader holds a position from 2 days up to 30 days, and a position trader from a few weeks to a few months to a few years. So it depends on your style. It'll also dictate what kind of financial instrument you'll be using, either single stocks or CFDs. I suggest use both. Okay, but obviously most of us on this website, on this webinar today, time is important. You're either working for yourself or working for a boss. You can't be watching the market the whole time. So I presume most of you will be falling into the category what we call either a swing trader or a position trader. And I've learned over the years as a trader, if I'm trading single stocks or CFDs, I trade 2 or 3 positions a day. Or for a week or so. I can't handle more than that. I see people sometimes have a single stock futures portfolio with 10 stocks in it. How do you handle all of those stocks? So that's what I'm saying. Yeah, you don't have to be watching the whole market all the time. You're only focusing on managing 2 or 3 positions. And then the style of trading I use, the strategy I use is what I call breakout trading. We'll talk about it in more detail. And very, very importantly, that'll be the method, by the way. And very importantly, the other M is money management. So have your seatbelt on at all times, especially with the volatility we're having in the market right now. So we talk about risk management, which is stop loss, and money management, which is position sizing. So that's in a nutshell where you want to be. So you want to develop your own kind of strategy. And the idea is that I always say you want to look for a perfect storm. You want to be focusing on what they call setups, trade setups that will give you the highest probability of success. So yes, we're talking about high probability trading. That's why I like breakout trading. And then, as I say, you focus on potential winners. So this is the process that I want to go quickly into it. Instead of looking at the whole market, I'm focusing on the top 100 stocks. So it's the top 40 stocks and the next 60 companies. So this is top 100, top 40, and then the next 60 companies, what they call the mid caps. Out of this, you got to create watch lists, as I say, on the website, and also maybe in your charting software. I'm using when charting here. You can create what they call data filters, create financials, industrials, mining. And from that, have certain criteria, technical criteria. I like to create scans. I scan the market and I scan the watch list. First of all, I scan shares that are bullish and outperforming. And that's based on the crossover 50-day and the 200-day moving average. As long as the share price is above it, it's bullish. Number one. And number two is that it must be outperforming relative to the JC All Share. Okay, so those are the two criteria I first look at. And then I obviously do the opposite, bearish and underperforming. And then from there, I use what I call the DMI. And DMI highlights for me, DMI indicators, got three indicators, DMI positive, DMI negative. But the most important one is the ADX, average directional indicator. And I'm looking for the ADX, and I scan the criteria, that same watch list now. I'm looking for shares that are moving sideways. Then I highlight for me shares that I can use for the breakout strategy. And depending on my trading style, if I'm swing trading or position trading, doesn't matter what I'm going to do in the breakout trading, it applies for both, but just it's the single stocks or CFDs that I'll be using. And from there, as I say, I'll be picking 1 or 2 or 3 different positions to be trading for the week or for that day. Okay, most of the time I'm a swing trader, and I'm happy to have positions open for a bit longer on the CFDs for position trading. But I'm going to highlight 5 different shares for you. The idea is to highlight trading opportunities and the process. Okay, so how do we get there? On the PHG's website, once you've logged in, you click on indices, and I suggest click on the tab called CFD. This will give you the list of the top 100 shares. I suggest you copy and paste this into Excel, and then you rank it by margin. 15% will be top 40 stocks, and then 17.5% will be the mid-cap stocks. So that'll just give you the 2 lists of stocks, and also you can see the list will tell you what kind of stocks they are. They're mining, financials, etc. That's number 1. Number 2, if you click on the CFD tab, a single stock futures tab, that also give you the list of margin required. And I'll go into more detail just now with that. But from that, as I say, I create 2 different watch lists. Here's my Excel spreadsheet, and I created in my data filter in the Went software. I can scan a top 100 list, I can scan a top 40 list, or I can scan a mid-cap list. Most of the time, I'm scanning the top 100. Okay, so what I've done is I've scanned the market based on top 100, and yeah, I'm using just a DMI indicator. So yeah, I'm looking for shares that are moving sideways. What I suggest you do before you get into this list is scan that list for bullish and bearish stocks, and then scan the bullish list for DMI and scan the bearish list for DMI. But anyway, on this list, this was this morning, based on Friday's data, there was a whole list of stocks that will come up and meet that criteria. Now from there, you have to go physically look at each stock. As I say, this list would be much longer. If I'd gone the bullish and bearish route, it would be much smaller and more time efficient. So that's the route I suggest you do. Okay. So here's the 5 stocks that I suggest you guys look at, or that came up in my criteria. So first of all, very important, as I say, this is BATS, British American Tobacco. It must be above its moving average to go long. Okay, so it's bouncing off. This is Friday's data. It was bouncing off a 200-day moving average, number 1. Number 2, bouncing off a support trend line. Number 3, breaking out of above a resistance trend line. That'll be my trigger. And that's where you would put your entry point. We talk about entry and entry points and exit points, or take profit points and stop loss. So this is what I call a setup. So here you can see a previous resistance become support, and that became support here. So the probabilities, you can see also, this is a stochastic indicator, where it's oversold. So the probabilities that we can bounce off this support trend line, yes, we can get to the 50% retracement. We're very close to a 33% retracement. I'm expecting a breakout above that resistance trend line. So yes, the 50-day moving average might present some resistance, but my target will be the previous high. You can see where's my cursor here? Bring it in again. My target will be, see the previous two highs, double top, and the trend came down. So my target will be the previous high, and that you'll see in the next slide. And I'm going to explain 5 different stocks, so 5 different methodologies for you. So here's bets. So the first side here, we're going long. So it's another word for buying. It's going long. The entry price would be 880 Rand. Remember, this is a British American Tobacco. We're using CFDs, so they're more capital efficient. And I'll talk about the benefits just now. Our target price would be that high I spoke about just now, 968.95. By the way, when you get this presentation, go through it and you can see how we got these numbers. My stop loss would be the low. Okay, so the difference, let me get my cursor again. The difference between the two of them, where I'm getting in, when am I getting out, that would be my risk. So in this situation, remember it's always in cents, 22 Rand 71, and between my entry price and my target price, that would be my reward. So I take my reward divided by my risk, I get a risk-reward ratio. And this is another thing that you always want to do before you put a trade on. Calculate your risk-reward ratio. It should never be less than 1 to 2. In other words, I'm willing to risk 1 Rand to make 2 Rand. In this situation, I'm willing to risk 1 Rand to make 3 Rand 92. Okay, it's worthwhile putting on the bet. Okay, putting on the trade. So that's how we got to that scenario. And then potential reward, what I've taken is that reward, that's potential reward I got as a percentage of my entry price. Okay, that's 10%. And because of the top 40 stock, I'm working roughly on about 15%. I've got a potential of making 67% on my margin of roughly about 15%. Okay, so it also tells me, yes, it's worthwhile putting on the trade. So this is where we talk about risk management, the stop loss. We go to money management, and this is one thing I always recommend. If you really want to become serious about trading single stocks and CFDs, it's worthwhile to start with 100,000. It gives you more flexibility, and obviously, position sizing less than that doesn't really help. If you read all the books, I always talk about 2% that you allocate per each trade. So 2% of 100,000 is 2,000 Rand. That's what I'm willing to risk per trade. Now, if I had only 10,000 Rand to trade with, that would be 200 Rand. I've got limited options when it comes to trading. So my stop loss is 22 Rand 71. Okay, that divided into my 2,000 Rand tells me how many shares I can go buy. In this situation, I can buy 88 shares if it was a CFD contract, or as a single stock. Remember, single stock is one contract equal to 100 shares. So I'm rounding up to one contract. So on single stocks, my margin required is 6,194 Rand per contract. So if it was a CFD, by the way, 15%, that's my exposure. 880 Rand times my 100 shares is my exposure is 88,000 Rand times 15%. If it was a CFD, I would have put down 13,200 Rand. So you can see from a single stock futures point of view, I'm getting a bigger bang for my buck. I've got greater leverage. Here you can see the leverage. I'm leveraging 1 to 12. Bring down 1 Rand, and I'm geared up to 12 times. That's what you want. I'm getting a bigger bang for my buck. So a lot of times you see that single stock futures would be much better option to go for. Okay, so that's the first scenario. Do you understand how I got all this information? Okay, so this is what I call the paperwork. Do the paperwork before you put on a trade. So that's the first example. Let's go to the second example. This is going long. Let's go talk about another stock now. Now we go to Old Mutual. Now, when I scanned Old Mutual, you can see now it's below a 200-day moving average. So the probabilities that it will carry on carrying down. So you see there's a bit of a sideways market here. There's a very important support level here. There's a long-term support trend line. I'm anticipating a breakout. You can see the ADX, by the way. This is a purple line here. It was trending down. So it's telling you we're in a sideways market. So yes, we are sideways. Okay. And you can see also this is stochastic indicator. We overbought. So we've had a little rally. We overbought. We're anticipating to break down. This will turn up. And when this ADX turns up, going into a trending market. So I anticipate a breakout and trending down. So my target, there's my entry level, be the breakout of that support trend line. That'll be my target price down here. My stop loss just above the 200-day moving average. So how do I get those numbers? Here we go. So it's exactly the same scenario. Yeah, I'm risking at 72 cents, but I'm willing to, my reward is 2 Rand 13. So that 2 Rand 13 divided by my 72 cents, my risk reward ratio is 2 Rand 96. Would I put on the trade? Yes, go for it. Okay. My potential reward in this situation is only 5%, 5.56%. Remember the top 40 index, so as a percentage, it's roughly about a third. Okay, just over a third of my margin of 15%. So would you put on the trade? Yes, I'd go for it. Okay, so that's risk, the stop loss. On the position sizing, again, I'm still sticking with 100,000, 2,000, about 2,000 Rand. Divide my stop loss into that, tells me how many shares. So in this situation, 2,778 shares, if I wanted to go CFDs, single stock futures, is only 28 contracts. So 28 contracts, this is taken off our website, as I showed you just now. 560 Rand. This is another thing about single stock futures. It's affordable. A lot of people can afford one contract, 560 Rand, as opposed to 15% of the exposure. So in this situation, our trade, 28 contracts, will give us an exposure of 107,000 Rand. I'm only putting down 15,000 Rand. By the way, if it was a CFDs, I would have put down 16,000. So you can see very close, but still single stocks will give you a much bigger bang for your buck. The gains slightly a bit lower, but again, for every 1 Rand movement, in underlying, my derivatives giving me 6 Rand 85. Okay, so that's an example of a short trade. Yes, JC Limited. Now, this is a stock I looked at last week and I thought, because there was this thing about alternative exchange and they were barred and things like that. This is what I always a monopoly. They've got a nice little moat, not easy to get into competition with them. You can see them moving sideways. My ADX would have highlighted it for me when I did the scan. ADX is trending down. It's oversold, so anticipating a bounce up. So the ideal situation, yes, you would be a breakout above. That's a triple top here. A breakout above that will take me much higher. I'm anticipating the difference between the two of them, and I'm adding on to the breakout. So yes, from a breakout trading point of view, you'd wait for breakout above previous resistance. But in this scenario, I'm anticipating the market to move up at least that little gap there. So that gap there was 12 Rand 30. There we go, 12 Rand 30. So my entry price was 175.70. My target price 188. So that's a previous high. So my stop loss is just below that. So that's the difference between my entry and my stop loss was 570. That divided into my 12 Rand 30 gives me a risk reward ratio, and I just meet that criteria of willing to risk 1 Rand to make 2 Rand 16. My potential reward, again, 7% as a percentage of, this is a mid-cap stock now. So on single stock, so on CFDs, it will be 17.5%. That's why I'm only got a 40%. Would you put on the trade? Yes, I'd go for it. Okay, so there's my stop loss is 570 divided into my 2,000. So that tells me 351 shares. Now we rounded up or down in this situation. Remember, 75 shares, we'll round it up to 100 shares. In this situation, we're below 75. I'm rounding it down to 3 contracts. JC single stock contracts required at 3,402 Rand per contract. So 3 contracts, I need to put down 10,206 Rand. Okay, my exposure will be 52,000 Rand. By the way, CFDs would have cost me, my margin required would have been 9,224 Rand. Okay, so you can see the gearing there again. So I know I'm repeating myself here with the process, but I understand this is how we do the paperwork. But this is just highlighting this based on Friday, what would have happened in the market. Here's another short. This is Netcare moving sideways, again highlighted by below my moving average, my 12-day moving average, bounced off support. It's only touched resistance, bit of a sideways market there. It failed to break out above resistance. The previous resistance will be support now. My trigger, my entry level, would be a breakout below that support trend line. and then I'll go short. And then I'll measure that distance, and I'll add on to the breakout. But then my target will be the previous low. This is all-time low for Netcare. If it breaks through that, it'll go much lower. Okay, you can see it's overbought. So yes, it has had a run already. I'm anticipating a breakout. So it's not a 100%, you say, a guaranteed setup. It's had a run already, but I'll go short on the breakout below that support trend line. So again, there we go. You can see the entry level, exit level on the target price. So this high probability, look at this here. I'm willing to risk 1 rand to make 4 rands 26. Would you go for it? Yes, I would. Okay. And there's again your stop loss divided to my 2,000, tells me 3,509 shares, 35 contracts, 327. So those of you just wetting your toes and learning about the single stock futures, yeah, 327, that's what you need to put down to trade as initial margin. I suggest obviously have a bit more than that for variation margin, but this is one way to test your ideas in a market, not risking too much money. And then MTN. A few weeks ago, we spoke about pair trading. We said go long MTN and short Vodacom. And that was this little run up here. But since then, MTN has been moving sideways. It's bounced off its inverse retracement level. So there's a lot of resistance here at that 150 level. Okay. You can see it has been going sideways, and the ADX is about to turn up. And when it turns up, it means we're going to a trending market, either trending up or trending down. I anticipate more downside. So it will be a breakout of those support trend lines would trigger a trade for me. So there's the details for the MTN trade. You can see also a high potential reward here. Would you go for it? Yes. Don't need a lot of contracts. Only 2 contracts in this situation, but you can see the gearing is still very, very nice. So it's a nice little trade. I like trading MTN. Okay, so those are the 5 ideas for you guys. And I say, some of you guys might have a lot of questions. So what are the advantages and disadvantages of trading CFDs? And I hope you got the idea that that's capital efficient. With CFDs, there's only one criteria from PHG's wealth point of view. The exposure, the value of the transaction must be at least 25,000. So 25,000 times 15%, that's your minimum margin. So CFD is not for everybody. Obviously, the margin requires much higher. That's why I say single stocks might be a good entry point for those of you that want to wet their toes. Very capital efficient, very low trading costs, the other 0.4% plus VAT. And the nice thing about CFDs, especially for those of you that want to do position trading, holding it for a bit longer, there's no expiry, there's no rollover cost like with single stocks. So you can save yourself 1% on that expense alone. Remember also of CFDs, you actually receive the synthetic dividend as a position holder. Remember, you're not a shareholder, you got a contract open on a particular stock. I've got a question mark here. Can you hedge your portfolio using CFDs? Yes, you can if you want to, but understand there's a cost involved. 0.25% we talk about, 1.5% minimum, or 250 rands. So it's scrip lending fees. That's a negative when it comes to CFDs. You also still got all the benefits of capital growth plus the dividend income from a normal share. Okay. Platform, you can place your trades after hours, and you still got your stops in that. You can alert you to the trades. You don't have to be watching the market all the time. I'm bringing down 15% margin. I'm borrowing the other 85%, so there is interest involved. So when it comes to CFDs, yes, a slight bit higher than single stocks, but then the costs are lower. So there's pros and cons. I say open up a CFD and a single stock futures account. We allow up to R1 million exposure. And use it to your advantage. Remember, you're not a shareholder, so you can't go vote at the AGM. And gearing and risk can be, gearing can be a disadvantage if you do not know how to use it, and that can be a risky thing for you. And hopefully from our presentation, you've learned that risk management and money management, very, very important. Okay, very similar with single stock futures. The nice thing here is that I suggest if you want to go short, use single stock futures. There you save yourself money on scrip lending fees. The only thing is here that they do have a life, so there's we're trading at the moment the September contracts. When it comes to the third Thursday in September, we roll over into the December contract. So there is a cost involved there, 0.25% of exposure. So there's pros and cons with CFDs and single stocks. As I say, have exposure to both accounts. With single stock futures, by the way, we trade what they call dividend neutral contracts. So you don't actually receive the dividends, they're priced into the price already. Okay, so those are just some of the pros and cons. So let me see what kind of questions you guys have. And I've gone over time a bit. Quickly, questions. Thanks, Sean. Okay, cool, no problem. Not yet, never, yes. Okay, that's answering my horse racing question. Never. Okay. Guys, like that's all, there's no questions. Okay. Cool. So I've taken some of you guys to go off to lunch. Cool. Peter, no problem. No questions. Stuart, no problems. Dion, pleasure. Okay, looks like that's it. Let me just wrap it up quickly. What I want you to gain from this presentation is create a watch list of potential winners. I call them potential winners. I always say, if I had the watch list of winners, I wouldn't be sitting here. Okay, so the idea is to scan, and this is where I find using technology is a big time saver. Scan for bullish and outperforming. That's one scan. And from there, scan for sideways market, or scan for bearish and underperforming, and then use a DMI. And then from there, save your shares with support and resistance and all the drawing tools on it, and then use the support and resistance and trend lines as a trigger for your entry and exit points. And then use chart patterns. I use the sideways market, the rectangular, as a price projection. So that helps me with, as I say, breakout trading. I use triangles. I use rectangles. And it helps me with entry price, target price, and stop loss price. But most important from this presentation, risk, stop loss, and money management position sizing. If you get your watch list right, wrong, that's also your risk and money management will still save you money. So, guys, from my side, I hope you've enjoyed the presentation. What you're going to do, if you haven't got a single stock futures account open with us yet and you want to start trading, please go onto our website and go register for single stock. But also while you're there, go open up a contracts for different account also. There's pros and cons of both of them, but use both to your advantage. So the webinar PDF and recording will be sent out soon to you guys. But also very important from my side, next week we'll be talking about 5 bankers. It's more from the fundamental point of view. The week after that, we're talking about a investment strategy, value and growth and momentum strategy. Thereafter, we talk about leveraging your share portfolio. And then what to do when changing your jobs. Those would be our upcoming webinars. But most important for you guys, if you know anybody in Cape Town, next week, Monday night, it's our first seminar. We have 3 speakers. We got Lizzie Visser. She'll be talking about behavioral finance, the good, the bad, and the ugly. A bit of some behavioral finance there. I got Charles from our asset management. Charles, I can't blank now his surname. Charles Lombard. Sorry, Charles Lombard. He'll be talking about don't let the storm change your course. So that's all about all the events that's been happening the last 8 months. Brexit and Nennygate and all those kind of things. How does that affect the investor? And then I'll be talking about volatility creating opportunity. But if you know anybody in Cape Town, let them know about it. It doesn't cost anything. Go to our website. Please go book. There's still lots of space available. The day afterwards, same presentation, same speakers. We're talking in Durban. And then next week, Wednesday, we're up in Joburg. But please, guys, help us, support us, and promote this event to your friends and family. Come along and come enjoy a good evening with us. But from my side, thank you very much for being on this webinar. Until next week, all the best. Bye for now.